Hello everybody, welcome back to another valuation investing video, and today in this video I'm be going over Salesforce stock, in which this stock in the past year is only down 7%, but looking since its all-time highs, we can see the stock is actually down 33+%. So this stock has really tanked and it's near its 52-week low. The 52-week low is $226 per share. Right now it's at $245. So with that being said, I'm be taking a look at this company, getting into the stock analysis, then using my intrinsic value calculator to see if we should be buying today near this 52-week low. So first, let's get into what Salesforce is. If you didn't know what Salesforce is, it's the largest cloud-based software company that provides customers relationship management, which is a CRM service to businesses. It offers a suite of applications and tools designed to help companies manage and improve their relationships with customers across sales, service, marketing, and commerce. Essentially, Salesforce helps businesses find more prospects, close more deals, and provide better customer service. So with that being said, taking a look at how big this company is, it's at a $234 billion market cap, meaning if you wanted to buy this entire company, that's how much it's worth. Also, taking a look here, look at the dividend yield. They do have a little dividend yield of 0.68%, a very small dividend, but there is a dividend yield here. So this looks pretty nice for Salesforce, but let's get into why Salesforce is down. Taking a look at why Salesforce is down, the first main reason is slowing growth and market saturation. Salesforce was once seen as a high growth cloud company, but the CRM market is now considered well entrenched. So there's a lot of competitors with Salesforce, and there's a lot of companies trying to get into the CRM business. Even though they're a market leader, its growth is decelerating basically every year, which has made investors more cautious. So their revenue and earnings growth has been decelerating basically every year. It's still growing at a pretty fast rate, but it keeps decelerating, so that is a slight worry. Also, cybersecurity concerns with this company. Recent data breaches have had customers a little bit worried, so that's another big thing. Also, I think the two main things is obviously the slowing growth and the focus on AI. The focus on AI, Salesforce has made a strong pivot towards artificial intelligence. However, some analysts and investors are concerned that this all-in focus is premature and may be distracting from the company's core business. So also, the adoption of Agent Force has been slower than expected, and its pricing model is confusing. So I think these are the two main problems with Salesforce and why the stock is going down. Obviously, the slowing growth and also the AI, the uncertainty with AI in the future for this company. Also, some activists and CEOs are selling this. The CEO is selling this company. They have recently been selling a little bit, so that might be signaling some underlying issues. But even though there's a lot of competition in this space, I still think CRM has a pretty big moat in which they have really high switching costs, which is arguably their biggest moat, where it's basically a high switching cost is if you say buy this product, it's going to be hard to get out of it, and it's going to actually cost more even if it's not as good. I'm not saying Salesforce isn't good, but it's just going to be harder to even say cancel it and then buy another platform. So that's a main thing with Salesforce. Operational integration. Salesforce is a mission critical application for sales. Also, specialized training. Employees become proficient in using the Salesforce platform. Also, intangible assets. Salesforce has built a strong brand and a reputation for being a leader in the CRM and enterprise cloud space. And their new technology, innovating with AI, could help this company with their moat. And also, network effects. Salesforce benefits from a powerful network effect that creates a self-reinforcing cycle. But Salesforce has their upcoming earnings, I think, on September 2nd, so just in a few weeks, and these are the main things I think we need to be looking out for Salesforce to see if this could move the needle for the stock to go higher. First, we need to look at AI and the Agent Force adoption, see how it's working out. Also, we need to see the customer spending environment. The Salesforce has been recently noting that customer spending has been slowing down. Also, RPO, remaining performance obligation, represents the total revenue to be earned from existing customer contracts and is a key indicator of future growth. Also, analyst sentiment, but I think the main thing we need to look at is the AI and just these three here. I don't think we really need to care about the analyst sentiment, but the main three is these right here. So getting into what revenue is estimated to be, we can see over time the revenue has been going up but with this recent quarter, we expect $10.14 billion in revenue. So that's going to be once again a record high if they can beat there for revenue for their quarter. Also, earnings, this is not supposed to be a record high compared to fourth quarter, but we're expecting still growth in the earnings per share of $2.78. So we do expect some growth there still over time. We can see this company is growing over time. But taking a look here at the revenue and net income, this is great growth from this company in the revenue and net income. As we can see, the net income has been kind of all over the place. Their profit margins have been a little bit crazy, and that I don't love about this company. But look at the revenue. We can see, as I said earlier, deceleration, and deceleration. 10 years, over the past 10 years, growing at 21%, past 5 years, 17, past 3 years, 12. So we can see that it is decelerating growth, but it does make sense because you can't grow forever with a company like this, but it's still growing pretty fast at 12% over the past 3 years. Also, the net income is starting to slow a little bit, but it's still getting better where it's growing very fast, even the past 3 years at 62%. But right here is the net income. We can see it was a lot of profit margin problems back then with this company. So that could be over exaggerating the net income growth because from 2020 to 2025, this was the growth here. And then also for the past 3 years. So it is a little bit over exaggeration because it's a little bit of anomaly years for this company to be showing that growth, but it's still growing pretty fast. Another good thing I like about this company, even though we can see over time the shares outstanding have been going up, ever since 2023, they started to buy back a lot of shares and spend a lot on repurchases. As we can see here in this last year, look how much they just spent on buying back shares, nearly $8 billion. Their free cash flow is $12 billion. Their capex is only $670 million, and they're paying $1.5 billion in dividends. So this looks good for the amount of free cash flow they have, honestly. So I really like this about Salesforce, and I think looks really good to me. I like how they're repaying their debt to $1.6 billion. So right now, I think Salesforce is looking at a good direction. I think they're doing this mainly because they've realized they're starting to become a more mature company. As a company becomes more mature, you'll see them start to reinvest more back by buying back and paying dividends. If this company was continuing to grow, I would probably see them continue to increase shares. But I think management is realizing that there's not a lot of growth ahead. I'm not saying they're going to grow at not even grow or grow at very low single digits, but I do think management sees in the future that they're not going to grow much. So that is a good thing with Salesforce. The management does realize that they are becoming more mature. Taking a look here at the growth estimates, we can see analysts do expect this company to still grow at 10% revenue for the next 5 years. So they're still expected to grow pretty fast. Also, the net income at 12%. So they still expect about double-digit revenue and earnings growth for the future. Taking a look at the 7-step stock analysis here, we can see that I actually get 6 out of the 7 key metrics. The PE ratio of 38. If you don't know what the PE ratio is, that's the price divided by the earnings. So this is how much you're paying for the earnings over the past year. You're paying $38. So compared to the market at 25, this is a pretty high multiple, but I think it makes sense for the revenue and moat this company has. Also, the forward PE ratio is actually very low at a 22, meaning this is for the future earnings per share. So you're paying a low valuation for their future earnings compared to the market. So this looks pretty good for the valuation there. The revenue growth growing at 17% each year, very fast growth. I like that over the past 5 years. EPS growth of 112%. Although I did say this doesn't really show the true growth because this kind of is an over-exaggeration since this was taken from an anomaly year of low net income to now. So it's probably not that fast, but it's still growing very fast. The only problem I have is the shares outstanding, but like I just said earlier, they are starting to buy back shares over the past 3 years, so this isn't a worry to me. But factoring in the past 5 years, they have been increasing shares, so that's not good. But I do like how they're buying back shares, and they've been buying back at 1 to 2% each year for the past 2 years, so at least they're buying back at a pretty decent rate. Also, the debt to equity ratio is very low at only 20%, so if you took the amount of money in equity they have, the amount of value, it's only 20% is debt. So that amount is actually very low, and I want it less than 50. And analysts expect the EPS to grow at 12% each year for the next 5 years. So this looks actually pretty good for Salesforce, and I like what they're doing as of late. So that looks really good to me. So now taking a look at my intrinsic value calculator, I have to do future assumptions to determine the fair value price for Salesforce. So for the bear case, I think for the bear case, they'll grow at 6% each year. I think that's a pretty fair place because say there's increased competition and they just not growing as well in the future. Now for the base case, I think for the base case, we could do 8 or 9%. Honestly, let's do 8.5%. Analysts do expect almost 10%, but I don't think they're going to be growing that fast in the future consistently. I think it's going to continue to decelerate a little bit. And now for the bull case, with that being said, I think for the bull case, we can give them, let's think, an 11% growth rate. I think that's probably not going to happen, but you do never know. Analysts do expect about 10%, and they've recently been growing at about, say, 10 or so percent. So it's not out of the question, but I think it's very unlikely. Now for the future profit margin. Right now, their profit margin is at about 17 or so percent. But like I said earlier in this video, the profit margin has been all over the place, going all the way up to 19%, down to nearly negative percentage just 2 years ago. Now all the way back up to about 16 or so percent. So that being said, I think for the bear case, if there's increased competition, I do expect a decrease in profit margin. So I think 13%. And for the base case, I think 17%. For the bullish case, I'm going to put a 21% profit margin because I do think that in the future, if this company does, I think they could potentially get up to 21% if they could become more mature and start to actually focus on becoming more profitable, which they do have to do once you become a more mature company. Now for the future P ratio, with the company growing 6% each year, the market average of 25, I think that's a little high. I do think this company does have a decent moat though, but the industry is a little bit oversaturated, I would say. So with that being said, growing 6%, I think this company maybe an 18 PE ratio, I'd say. For the base case, I think for growing 8.5%, I think for the PE ratio, right now, like we said, I think it's trading at about a 30 some PE ratio, but the future P ratio is pretty good. So I think a 23 P ratio for Salesforce. Now for the bullish case, I think for Salesforce, let's do a PE ratio of 28. With that being said, now doing the shares outstanding, let's do the shares outstanding. Like I said, they've been decreasing their shares. Let's say they decrease at 1% on the bear case. For the base case, let's say they decrease 2%. For the bullish case, say they decrease at 3%. With that being said, honestly, right now, I think Salesforce is a little bit overvalued to me. Right now, I think if you bought on right now with the bear case, you'd make a negative 11% return. For the base case, you would only make 1%. For the bullish case, I think you can make 13%. So if you think this company can grow at that fast a rate and increase the profit margin and deserves a high PE ratio, then I think you could buy this company, make a decent return. But right now, I'm not buying this company. But let's say we had a PE ratio of 30, which I think is insanely high, and say this company grew at 10% in the future and even got that profit margin up to 20. I think you might be able to outperform the market, but honestly, right now, I just think I would be waiting a little bit for Salesforce because I think there is some competition issues and this company is already so big, it's going to be harder for them to grow in the future. I truly think if I wanted to buy this company with what I had before, let's go 8.5% profit margin or 8.5% revenue growth, 17% profit margin, and say we actually give them a 25 PE ratio on the fair side. I think if you want to buy this company, it would have to be let's say $175, I think would be my price to buy. If it got under 175, I would start to get interested in Salesforce, but right now I just think it's too overvalued. So with that being said, thank you guys for watching this video. Give me some feedback on this analysis. Please subscribe. Only 12% of the people that have watched these videos are subscribed. Please like this video and comment down below. See you. Thank you guys for watching.